24th of July and another interesting week for bonds. And, another month is pretty much gone and past us. So we are moving on, trying to get to the end of this one, see how these bonds are going to hold up. But, like we always talk about, is really about the bonds. Something I want to point out to everybody. If you've got an IRA, you're like, I'd love to do one of those loans. I can buy real estate and put it in my IRA, but they're so damned expensive. I've seen 50% loan to values. The max people do 60, 65. I've got access to a 75 now. Guys, if you have an IRA and you've owned real estate in it for a while and you've got a bunch of equity, you want to be able to pull some equity out, talk to me. There's something we can do about that. If you want to use your IRA that's just sitting there doing nothing right now, not really making a lot, and you want to be able to buy some real estate, but that 50-50 thing wasn't looking awesome, I got you. So reach out to me. We've got an opportunity for you. We can figure out how we can make that work. Also, we also got some real estate sales folks that have got some opportunities that you can buy into these properties, and they'd be able to help you get that interest rate down quite a bit in the IRA. So if you haven't considered an IRA loan for your mortgages or for real estate, something you may want to look at. So let's take a look at some other stuff right now. What has happened in the market this last week? I'm going to go ahead and share with you some market stuff. This is our bonds at the moment. So welcome to today's bond trade, basically, because if you've got a mortgage, you're about to get one, Wall Street is trading your money before you ever sign the paperwork. And this is where we track that trading. Everybody's asking me, why did the rates jump again this week? Look, this whole, few days, it's been taking quite the beating. If you look at that, it's not like the bank just woke up and somebody went there before they got their coffee, was pissed off, and say, well, something, we're just going to charge everybody for money. We're going to charge more. That's not what happened. Now we're going to rewind the last 4 trading days. Last week, the Wall Street celebrated consumer sentiment and inflation and producer inflation all came into where it looked like we're in a positive position. That's all this right here. Bonds rallied, treasuries fell. Everybody started talking about the lower mortgage rates. Then reality set back in. Tuesday, Mortgage News Daily's pointed out that something was really important. The fuel prices was influencing what was happening in the market. They were at their highest levels in months. Oil futures pushed even higher overnight. Now, there wasn't a perfect minute-by-minute relationship between oil prices and bonds, but Wall Street wasn't looking at today's gasoline prices, it was looking at tomorrow's inflation. And investor will start asking, what if June's lower inflation doesn't last? Mortgage-backed securities are getting weaker. Treasury yields climb. And then Wednesday, there was no blockbuster economic report, no surprise from the Federal Reserve. Instead, the market continued digesting the idea that higher energy costs could eventually work their way into inflation, and bond buyers demand a little bit more return for their money. So if they're going to commit their capital for 30 years, they're going to want to get a better return. So it's summed up perfectly that just another reasonably bad day for bonds is what went out into the market. So bond buyers stayed cautious. Mortgage-backed securities lost more ground. Mortgage rates drifted back to their recent highs. I mean, look at this. We bridged these highs. In fact, I drew a channel here I'll show that to you here in a bit, what we did with this channel. So we're starting to see some stabilization though, because we get to the bottom of this area here, and it's also the bottom of the channel. And I'll show you the channel. So they're starting to rebound a little bit. We don't know how well it's going to rebound, though. So you just got to remember, when you're locking mortgage, you're entering a trade that day. That's what you're doing. You're trading in the bond market. You're entering into a security, and they are purchasing your promise to repay. You're buying control. Control of what? An amortizing, appreciating, income-producing asset. These are two separately different objectives. Wall Street's trying to preserve the purchasing power of its capital right here by raising this up. You're using that capital to control an asset that can generate income, build equity through amortization, and potentially appreciate over time. That's why don't start asking what's the rate. Ask by what changed Wall Street's opinion about the value of money, because that's what mortgage-backed securities are. That's what determines the mortgage rate. And every time you catch yourself becoming a rate shopper, you got to ask yourself this, or you got to remember, Wall Street is buying a stream of eroding payments. I'm buying control. The main question is, does the asset work in today's rate environment? Not, I need the rates to make the asset work. That's backwards. That's how the smart investors think. Now let's take a look at what we can do here with this. Actually, I can't access that. So we're going to have to actually punt on that channel show till next week. I'll be able to show you that, or Tuesday, unfortunately, because for some reason that computer not wanting to play ball. But understand the system, use the system, quit jerking off and make the trade, because the deal doesn't work in today's rate environment. You don't have a deal. You don't need the rates to get better to make the deals work. You need to find the deals that work today, period. If you don't know what makes it work, reach out to me. We'll talk about it.